I guess, headline-grabbing increase crossing 22 trillion. The pace of the increase at the moment, though, when it comes to the political debate, much slower than it was under the Obama administration.
Look, when we're talking about debt, it's always going to be growing in a growing economy. So that per se isn't a problem. You want to look at debt relative to income or delinquency rates. Auto loans are a problem spot in an otherwise generally healthy landscape of consumer borrowing. If we're talking about consumer borrowing, that was the New York Fed report. Yes, borrowing is rising, but debt to income for consumers is still declining. They're still not borrowing as fast as their income is growing. And that's a sign of health for the consumer balance sheet.
All right, so maybe let's worry about the national debt a little more. I mean,
federal,
$22 trillion.
Yes. That's a bigger problem.
At a time when the economy is expanding.
Yes.
And yet, there's insatiable demand for U.S. debt. So why is that a problem?
Well, that's actually quite a hot debate right now. Is debt a problem? The fact that we look to be in a world of persistently low interest rates has led a lot of economists and policymakers to rethink whether debt is, in fact, the problem we thought it is. It certainly doesn't seem to be leading to that loss of confidence or rising interest rates that it can in emerging markets. The U.S. has the advantage of being a reserve currency, like Greece, like Argentina, like Venezuela. Many examples of that. The U.S. has a different advantage for being a reserve currency.
Well, on that point, I mean, debt to GDP around 100%.
Yes.
There's no risk of anyone starting to lose faith in the dollar. I mean, you look at China, around 300%. Japan, high 200s.
Right.
The U.S. in that perspective is not that high by developed economy standards.
Right. By reserve currency standards, it isn't that high. So there is. And there's no imminent signs, as you say, of loss of confidence in the dollar. There's really no alternative. So
we're fine. We don't have to worry about either side.
Now, the worry is it won't matter until it does.
I was just going to say, isn't the problem, Julia, that if we go into a recession and we need to have fiscal stimulus to try to dig us out, it's going to be problematic?
The debate over fiscal space, I believe, look, there will be fiscal space because interest rates are low, because people want to buy U.S. debt. We'll be able to inject fiscal stimulus in the next recession. That's not going to be a problem. To me, it's more the questions over the longer run, the growing deficits. There's nobody arguing for fiscal austerity or discipline anymore. We've got an aging population. Where does the problem come in? Japan's been certainly, as you noted, exploring this frontier with 200% debt to GDP. So far, it's okay, but we'll see.
Just quickly, corporate debt levels, how do they look?
Corporate debt levels is a completely different animal. That is high. It's high relative to corporate profitability and corporate output. So I think if we are going to see a debt problem in the next recession, it's going to be on the business side, not the household side and not the federal side. I think we've extended credit that probably shouldn't have been extended this time around.
So of the three, that's the one to worry about?
That's what I think, yes.